On one Friday in July, a company most Americans have never heard of walked onto the Nasdaq and walked off with $26.5 billion. That's the biggest stock market listing in U.S. history by a foreign company, bigger than Alibaba's record that had stood since 2014. And the wild part isn't the money, it's who pulled it off. The company is SK Hynix, a South Korean memory chip maker, and here's exactly what happened. It sold about 178 million shares at $149 each and listed them on the Nasdaq. Investors flooded it with orders, more than 7 times what the deal could actually hold. The shares opened around 14% higher on day one, and a chip company you couldn't name had set a record that stood for more than a decade. Because 20 years ago, this same company was a punchline. It started in 1983 as part of Hyundai, then piled up debt, and by the early 2000s, it was a near-bankrupt stock Korean newspapers mocked as a national penny stock. In 2012, the SK Group bought the struggling chip maker for about $3 billion and renamed it SK Hynix. That same company is now worth over $1 trillion, only the second South Korean firm ever to cross that line after Samsung. So how does a laid-out penny stock become the most valuable comeback in Korean corporate history? One 3-letter product. That product is HBM, high bandwidth memory. Basically stacks of memory, chips glued together to feed data to AI processors as fast as possible. Every big AI chip, including Nvidia's, needs this memory sitting right next to it. And SK Hynix makes roughly 90% of the HBM that Nvidia buys. It controls about 62% of the entire HBM market, and it has already sold out its chip production all the way through 2026. Now watch what that did to the money, because this is the whole story in one line. Back in 2023, a memory price slump actually pushed SK Hynix to an operating loss of almost 8 trillion won. Then the AI boom hit, orders exploded, and in 2025 its revenue jumped to a record 97 trillion won, around $63 billion. In about 2 years, it went from losing money to the most profitable year in its history. And that is what those record-hungry investors were actually buying. To see how big this really is, line it up against the record books. SK Hynix's $26.5 billion beat Alibaba's $25 billion from 2014. And it's now the second largest US listing of any kind, behind only SpaceX's roughly $86 billion a month earlier. But here's the twist that most headlines skip. This wasn't SK Hynix going public for the first time. It has been trading on Korea's stock exchange since the 1990s. This was a second listing, in New York, on top of the one it already had. Why bother? Because Korean stocks often trade at a discount to their global peers. And by listing where the world's biggest investors can easily buy in, analysts figured SK Hynix could lift its own value by as much as 20%. In other words, the same company sold in a bigger store gets a bigger price tag. And the aftershocks are already landing. In 2025, for the first time ever, this old underdog outturned Samsung in profit, the company it spent decades chasing. It says it'll spend the new money on more factories, advanced packaging, and the ultra-expensive machines that print these chips, while the US government is openly pushing it to build some of that on American soil. So the real lesson of the biggest foreign listing in US history is simple. SK Hynix didn't get lucky on a headline. It spent 20 years betting on one boring-sounding chip, and the AI boom finally made that bet pay. Here's the thing, though, putting almost everything into one hot chip is exactly the kind of bet that can go wrong fast. So next time I'll show you why Enron's collapse made, don't put all your eggs in one basket, the most expensive lesson in investing. Hit subscribe so that one lands in your feed.